Money, that is what this podcast is all about. And I made more money than I have in a long time over the last 2 weeks. And if you like money, you should follow and like the podcast. Those who follows knows that I sold down my gold. I used gold for the last 4 years, almost doubling my money. Then I got out of gold just under $3,000 per ounce, investing everything and increasing my portions into the stock market because to me there was an obvious buying opportunity. And now it has been paying really strongly off, and I think it will continue. We are heading into week 18. You are listening to the StockInvest.US podcast Trading Tips with Jim in a week, which will be full of quarter results and other numbers. So this podcast will be a lot about numbers. But just let's rewind a little bit back. I told you I thought this was a very strong opportunity. I increased all my holdings. As you know, I was way down in the 30s, then I increased to 40-50% exposure in the market. I sold my gold and increased even more because I thought there was an obvious buying opportunity. And this is about the long lines that I preach every single time and every week in the podcast. Try to read the big long lines. And in all these fuss when media is scaring the guts out of you with tariff talks, economic doomsday, etc., you just have to read between the lines. And if you're like I am, you can stand in for a huge profit. Other than trying to read the long lines, of course, you should have some good strategies like stop loss, etc. Make sure that when you go into the game, you stand to lose the money, that you can lose the money that you are in with. That's a super important rule. And limit your losses with stop loss. Being in the position that I am able to have quite wide stop losses, and this is needed when there is a very volatile market. And as I told you, markets were expected to be, and they became very volatile. It's a typical thing. Things got totally oversold. And then we have all the rebounds back. And last week, Nasdaq went up 6.73%, Dow Jones 2.48%, and S&P 500 up 4.6%. So super green week. And it was driven, of course, by many of the major companies. Personally, I did the purchases like I bought Nvidia at 88. I got into Tesla super cheap just to read everyone saying no, Tesla is doomed, the quarter results is shitty, everything is going straight in the toilet. Even one of Norway's top investor advisors said that Tesla was a doomed case, and from quarter results it will only push downwards, but Tesla pushed upwards. And the lesson here is that do not mind so much about the quarter results. As I've been preaching, you have to focus more on what is said in the quarter results presentations about the future. Because quarter results, and I will mention a lot of them today, they are a product of something that has been. And the more important thing is what will be. And in the case of Tesla, Musk announced that he will slowly step down from Dodge and a few other things, and that was enough to fire up the train that believed Tesla is and still will be one major company making headways also in the stock price. And I will not be surprised if Tesla just continue upwards. Currently, I didn't check last, but it should be somewhere around $280+. I bought it way down in the 220s. On a good buy, and now just benefiting greatly. Gold, which I just mentioned that I sold. Gold is at 3,301, was up above 3,450, and I told you I might sold my gold a little early, but I needed the money. I thought 3,500 could be where gold would be, but I see gold coming down, and the reason for this is that interest rates will go down and everything will move to more high risk assets, which again is just why I invested so heavily into the markets. Your question should be, am I still heavily exposed? Well, I did take some profits by end of last week, but I'm still quite highly exposed into the market. I believe I'm probably around between 75 and 80% into stock. Looking at the chart, we can clearly see that there is a high chance that Nasdaq actually found the bottom at 15,300 and is moving up, but nothing is giving. Right now it's getting close to getting overbought, which means that there is a fair chance that it can have a small reaction down. But there are absolutely signs that the downwards trend might be changing for a upwards trends again, and that we're heading for a better period. But all of these things remains to see. Right now we will fight the top of the trend, and it can easily go down from here. What are the things, the worst case scenario things that may cause Nasdaq to fall down, or markets in general? Well, Ukraine war is again at some sort of edge. US been pushing very hard to get a ceasefire and try to broker a peace deal. We know that Europe are not so keen on the same peace deal. Actually, a lot of them argue for more war. And if you understand how money works, well, it's a reason why an internal politics like in Germany, in France, why they want the war continue. It's good for the internal politics because the countries as such are not well managed. Even Norway, small little Norway, the current sitting socialist government, they need this war because they can play on the fear. So it's no strange thing that you hear a lot of warmongering from certain politics, and you can just follow the money. The money is easy to follow, and they've been going into the war industry over many years. That is why 4 or 5 years ago when Biden was elected, I told you just get into the war industry because that is where the money will be. Personally, I am only a few shares into war industry. They will pay huge dividend in the years to come because there is still an arms race and it will continue. But in general, I think there is more money other places, so I have slowly turned down. Same thing actually with oil, also less in oil, more back in IT and tech and other commodities, which I think will do good in the future. But back to Ukraine. So this thing, US already said that, well, if things doesn't happen, we might just stop even trying. And for those who wants to understand the longer picture, so why is US doing all of these things? And if you read media, you just get the wrong viewpoint of it. Understand that China is a big threat and will become a much bigger threat in the future. It has grown because we have ordered everything from China, and China has been using tariffs and subsidies to just knock down everything, making them the hugest production country in the world, and increasing their revenues, their economic growth. Now they have built a super large army, and they are just at the top. That's how it is. US understand this, and they understand that the future will be how to deal with China, and they cannot keep the strong support in Europe. Europe has to step up with their own defense, and that is why, for instance, Trump been pushing NATO to increase, all the NATO countries to increase from zero contribution or maybe 1-2% contribution to increase at least up to 4%, start paying for the defense so they can defend against what the West considers to be the big enemy, Russia. In general, I'm not so sure Russia is the big enemy. I think most of this is constructed. Anyway, this conflict may now change if there is no peace deal to be made in Russia, and that they want to continue down the war path. These things can go from seemingly starting to be heading the right direction to go to the total bad destruction. Then it doesn't matter what kind of stocks you have. By the way, that road will be fast, and it will be fast downwards. Then you should be sitting in gold, oil, and a few other items. Personally, I take the chance that it will play in the right direction, but I have to admit it's a very special point in time. Then there is the upcoming Taiwan conflict, which will come eventually. Will it come? I read some speculations that it will come in 2027. That is the year of Xi Jinping to finally be strong enough to take Taiwan without being scared of facing any defeat. We will just have to see. Right now everything is about tariffs, it's about the market, and there is this scaremongering that inflation will go skyrocket. This week there will be some quarter results coming out. There will also be GDP numbers. They will come on Wednesday. It's expected that GDP for the first quarter of 2025 only will grow 0.1%, while it grew 2.4% in Q4. I think, I'm just saying that before the rest of the numbers, I think all numbers will be much better than what the market think. And if that is the case, that will push the market. So we had the worst case scenario where we get into more conflicts with Ukraine, etc. And on top of this, of course, we can add that all quarter results are really bad and all the economic data is really bad. And if that happens, we can easily go back to these minus 5% days on Nasdaq. On the positive side, if we see more talks about peace in Ukraine during this week, more substantial talks about Ukraine, and what I think will be the case, that the economic numbers will be way better than the market think, we can be in for yet another strong week. GDP on Wednesday expected 0.1% increase in GDP. I think it will be stronger. There will be core personal consumption expenditure numbers expected to lower because in general inflation's been low, and they say, oh, this is the very, very last period of low quarter numbers, but I think they will be wrong. I think inflation will go much more down. Interest rates are already being cut in Europe, and I think they will be cut anytime soon in US, and it will be a year of interest rates cut and inflation taking a huge dump. Oil, $63 increased a little bit from 60, but just wind back half a year ago, and oil was way up in the 70s, cruising up in the 80s, touching 90s, then back to the 70s. Now we are 30% below these levels. What do you think happened with energy costs around the world when oil is this low? And I believe oil will continue downwards. It will ease the pressure on inflation. It will reduce the cost of production, and the tariff things, to be honest, I don't think they will play maybe for a very, very short time, but the end result will be very strong in my opinion. You will have jobless claims numbers on Thursday, and there will be unemployment rate on Friday, expected to stay at 4.2%. Numbers, I believe, will be on the better side. The consumer confidence, and it's expected to fall. It will be on Tuesday, by the way. Expected to fall from 92.9% confidence to 87% confidence. But just read the media and what they are spitting out, puking out over the ether. It is most of it is just nonsense. You just have to look behind the board. We will see who will be right. My bet, as I said, that I bet totally different than what media do for sure, and I'm more aligned with the big players, and they have had huge interest of portraying a black market whilst buying up at low prices. Anyway, 13 minutes into the podcast, we will shorten it and start rambling through the quarter results. Before, I will tell you the 8 buy signals that were in week 16. How did it go with them? And I have 8 stocks with new buy signals at the end of the podcast. The $1,000 challenge, where we try to grow $1,000 as fast as we can. And currently, those $1,000 is $3,305.06. So it's up quite much. Will it continue? Well, you just have to keep listening a little bit more. Quarter results, here they come. Today on Monday will be Domino Pizza. Domino Pizza is expected to swing 6.93% either way. It's expected that Domino Pizza actually will increase their earnings per share by 15%. So this will be the marker for where Domino will fall, which way it will fall. But absolutely a stock if you are into heavy trading. Domino is one of them, which expected to move a lot during the day. Waste management is expected to actually lose a little bit, 6% change in earnings per share from 175 down to 1.65. I think, and the expected swing is 3.22. My personal opinion is that waste management might surprise. We will see. Tomorrow on Tuesday is much more interesting. Then there will be Coca-Cola, but there's not so huge expectations to anything in Coca-Cola. Is expected to be very stable, down -1% for the quarter earnings. But a very, very little swing in general in the stock, 2.43%. Pfizer will also come, and Pfizer is expected to actually lose -22% less earnings from $82 cents per share down to 64 cents per share. Pfizer had a good years when the COVID hype was, and we know all about that. Not repeat that. Swing expected to be 3.4%. Starbucks is also expected to reduce their quarter earnings. The consensus is that the earnings will come in at 49 cents, down from 68 cents. Starbucks went woke and had to pay the price for these things. They went totally woke, then prices increased, and they suddenly had a product that was not so attractive as it used to be. You pay the price. Simply, you pay the price for not following just normal standard business practices. Anyway, I think there might be a future nice upturn in Starbucks. I will look into it. If you follow this podcast, 6 years of podcasting, you know that I've been in and out of Starbucks. I made much money on Starbucks before, and I think I can make more. Starbucks slowly becoming an interesting case. Expected swing only 2.73%, but let's say that the earnings will come in higher, then the swing will be much more. Visa, boring company, not much to say. They are making money almost any way they turn, but I think both Visa and MasterCard, which will be on Thursday, I believe, slowly will start to tell how crypto affects them. This is the interesting, much more interesting for the future. Visa and MasterCard together hold more than 50% of the payment market, if I am not mistaken, but they are now facing a lot of challenges. Good is that 2% swing for Visa. Wednesday will be Microsoft, Meta, Qualcomm, and Robinhood, and I cannot read all of them so much, but all of them are expected to grow their earnings per share quite drastically, especially Robinhood expected to grow their earnings by 78%, expected a movement during the ±5%. I think it can be much more, we will have to see, but the expected earnings is to come in at 32 cents, up from 18 cents before. So Robinhood on Wednesday is the one stock that most eyes will be following. Of course, there will be huge eyes on Microsoft and Meta, but there is no real strong expectations of something unknown. Again, the most important thing that investor will look into is what is said during the quarter presentations. What are the things that are changing? How is AI moving? Are they able to make money on the AI, or is it just losing money? How is cloud doing, and all of these things? That's where the focus will be, not so much if the results is 3.2 or 3.1. I don't think that will matter much. It will be much more what is said or not said. Thursday will come with even more quarter results. I will just read the companies, and that's just half of them because there were too many, but here are some of the biggest: Apple, Amazon, Airbnb, CVS, MasterCard, McDonald's, Reddit, and Roblox will come on Thursday. From these companies, Roblox is the one that is expected to swing the most, 8.7% plus minus, can go either direction, but a huge movement is expected in Roblox. By the way, expected to lose money, continue to lose money. They've been losing money. Last quarter was minus 43 cents earnings. This time a little less, 0.41%. Roblox is one company that you should follow. Reddit is expected to move 5%. But the thing you should know about Reddit is that everyone now expects the first positive quarter from Reddit From having minus 8.19 cents earnings per share, it's expected to reach 3 cents positive. Very exciting. We will see how it goes. McDonald's have been struggling also a little bit in the consumer market. They are doing a lot of changes to the menu, by the way. Not huge expectations in general for the company. In average, if you look at all of these, most expect actually good quarter results. There are some which are negative. On Friday will be a few more. 2 of them are oil companies, Chevron and Exxon, and they are expected to lose minus 17 and minus 22% on their earnings per share to drop. But this is related to the oil price, so no big surprise. And I just told you oil was down, so expected income for Chevron and Exxon should also be down, but they are tuning their operations, and you have to understand how much money they've been making over the last few years. They are very well positioned for the future. There will be a few other companies. Football TV is one of them, expected to continue to lose money, but continues to lose less. They're expected to lose 7 cents per share compared to 15 cents last quarter. Could be a share, interesting share, I don't know, for those who follow football TV. Last I will mention in the quarter results is Berkshire. Berkshire is absolutely something to follow because it's a magician running the company. One guy who absolutely knows everything about investing. It's expected actually to reduce earnings per share to 4.18 from 5.19. So it's a 7% drop in earnings are expected. But Berkshire sold out a lot of stocks during last year, and the question is, have they started to reinvest, and where are they investing, or are they still holding on to that huge cash portfolio? Interesting. You will know a lot more on Friday when Berkshire will give their quarter results. Okay, a lot of numbers. Sorry, it will continue with a little bit more numbers, but I'll try to make it shorter. So in week 16, I gave you 8 stocks. Nasdaq fell by 2.62% during the week, but these 8 stocks, they went up an average of 0.5%. Some went really a lot up, some went down. 3 stocks went down, 5 went up, so we beat the market also week 16. Week 17, last week I was not able to do the podcast due to family issues. So I just simply had to take care of something else. But now I'm back, and for this week, here are 8 stocks which are giving buy signals from my system. A system which I keep tweaking, keep making better and better. Hopefully it will be really good. We will have to see. As a part of a process to give you a better chance of beating the market. Maybe one day I will get into details how it's done, but we are slowly getting there. 8 stocks for the week that is giving buy signals. I will let you know how it went last week. Ferrovial in the industrial sector, current price at 48 is giving buy signals. The metal company is giving buy signals. It's basic materials, by the way. SME, which we had before, SME, financial company, been in and out of these 8 stocks quite many times. Currently back at buy signals. Altair Engineering at $112 is giving buy signals. Casella Waste System is giving buy signals. Krastos Defense in industrial is giving buy signals. Schrödinger in healthcare is giving buy signals. Current price is around 26.50. Sprott Gold Equity, which was in before in week 16, got out in week 17 because this is just 1 week. I gave you this for 1 week. Is back currently at $70. So 8 stocks, which is giving buy signals. It works like this. It's Monday now on this podcast. Maybe you're listening on the Wednesday, but this is made before markets open on Monday. These 8 stocks, some of them I will buy, not all of them, but some of them I will buy. They're giving a buy signals. I will use the opening price and I will use the close price on Friday to tell how it went. So you just have to follow. Quick recap of the 8 stocks. Ferrovial, FER, The metal company TMC, SME, which is the same ticker SME, Altair Engineering, ALTR, Casella Waste Systems, CWST, Kratos Defense, KTOS, Schrödinger, SDGR, Sprott Gold Equity is SGDLX. These will also be listed in the video version. Now we are only left with one thing. It's the $1,000 challenge, where my last investment was into NIO at $5.10, and for weeks and months we've been waiting for NIO to come back, falling deeply with the market. Was down, I believe, even under 3. It was almost catastrophic. I started with $1,000, been in and out of different shares, but as I said, the last investments is into NIO. NIO currently sitting at $4.03, down 21% since it got into the portfolio, which currently holds a value of $3,305.06. I wanted to grow this to 10,000, and from 10,000 we grow it up to 100,000. That was the plan, to do it much faster than I have so far. So somehow I have to speed up, but still we are quite much up. I sit still in NIO because to me EV is the future, and I think all this fuss and mess around this tariff things, they will come to a nice conclusion, and when the dust settles you will see that there are some EV companies that are doing very, very good, slowly taking over the car market, because we are moving away from a fossil past into a more eco-friendly future. No matter what, this is how it will be. Cars, yes, fossil cars would get even better, and I love fossil cars, by the way, nothing against that, but the future in my opinion is EV. And what is happening is that some of these companies, they are making such a huge pathway into the structure around EV, with charging stations, with how they swap batteries or charge, fast charging, the infrastructure. They are building the infrastructure, and that just makes these companies extremely very well positioned, even for buy-up, because these bigger companies like Volkswagen, Ford, all of them, they will have to make a choice sooner or later. They went into EV, then they went out of EV when the Green Deal was off, then they went out, everyone was losing money, but slowly they are building up their portfolio. Toyota is actually the one that is the farthest into EV from all these big companies. Toyota always been a smart company. They have a lot of hybrid, also getting more into pure electric. But someone, and when this wave real will come, they will need the infrastructure around it. And my guess is that Tesla, NIO, Lucid, BID, these companies, they are very well positioned for merger, for buyouts, and in general. Now it's all about getting margins on their sell. In the beginning, when you build up companies, you lose a lot of money, because that's exactly what you do. You want to build up the scale, and then you get into the positive cash flow. 28 minutes, longer than I thought. I hope you enjoyed it. It was 28 minutes of rambling about numbers. Anyone following me know that I wish you a super week ahead. I wish that your portfolio will be much greener by the end of the week than it was at the beginning of the week. I hope you will be back next week. Until then, all I can do is just wish you a super day. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.